All right, traders, before I go live with my team within Trader Society, I'm going to make a quick video for you guys that is going to help you prepare to trade the FOMC. We're going to be going over the key levels where we're interested in buying put options and where we're interested in buying call options. I'm going to be sharing with you some technical strategies that we are planning to use heading into 2 p.m. and 2:30 p.m. where the big moves are going to be happening. Let's get straight into it. So in terms of today, I ended up making only one trade so far. I ended up hitting put options in the morning when SPY was at $438.10. As you know, we were targeting puts at 438. I ended up hitting those puts at 438.10 once I had noticed that SPY formed a gravestone doji, which is a bearish trend reversal doji candle for the short-term micro price action. I hit puts shortly after that as it formed another doji right here. This was the bearish signal right here, this gray candle. And then I sold into the dip as my target hit. I was looking for a quick scalp on 438 out of the money puts where I sell in the money, and my target was 437.70. I did very well on that, making $1,500 in a couple minutes. Now, in terms of the SPY, how are we planning to trade this heading into FOMC? What is going to be our key levels? What do you need to understand in terms of the overall price action when it comes to being interested in buying calls and being interested in buying puts for the potential reversals? So this is what I need you to understand. I need you to understand that 438 is make or break. $438 is make or break. As of now, it's been reacting as an overall resistance level, but this is what I need to bring awareness to. This is the daily chart that is going to tell you everything it is to know. And you could see right here, the bottom of this is 437.10 and the top of this is 438. Why does this matter? This one point zone, the resistance is at 438, the support is at 437. It's a 1 point zone. If it continues to trade in that zone and it goes under 437 and then it bounces back up and they turn 437 into resistance, into a lower high, that means the bulls are officially trapped and it's going to trigger a major bull trap if that occurs. So it has to trade in between the range of 437, 438. It has to crack 437. It has to spike back up. And if they turn 437 into a resistance level, it is super bearish and it's going to be a bull trap if that occurs. As you can see, it topped at 438 and it crashed all the way down to 425.44 in one day. So that is your bull trap scenario. You need to be analyzing the candlesticks in multiple time frames, including the 1 minute, 5 minute, and 30 minute, to see if that zone is reacting bearish or bullish. Now, in terms of the bull case scenario, I personally do not like this idea, and I will likely not trade this idea. If I believe it's bullish, or if I play puts and I get stopped out, my max pain will be at like 438 with a very tight stop, right? But if it looks bullish at 438, I need you to understand there's no reason for puts. If they break above 438 and they consolidate, they form a floor at that 438 level, the next level is right here on the daily chart at 443.50. This is your next support level. They'll try to drop it at 443.50 to 444, which is the next level where I would target puts in between 443.50 to 445. What you need to understand is if it breaks above 438 and forms a support, you should be laughing at the bears because they're going to get squeezed all the way up until 443 to 444, right? So just be aware of that and keep in mind. So my plan is if I see bearish confirmations in between that zone I mentioned, the 437, 438, obviously the higher the level, the better, then I do puts with a very tight stop loss. And then I will wait if I get stopped out or if it looks bullish and I didn't play puts, I will wait until 443 to 444.50, right? Those are my ideas. I don't want to try buying and chasing calls at 438. Now, if I were to see a bullish confirmation, if I were to make a trade purely based off of price action, then that's what it would be. But I wouldn't say that's the best set of the best price, but it would just be a trade based off of price action, right? But that's going into this is from my understanding, right? So there's no reason to do puts. If we break above 438, hold, turn support. No reason for puts until 444. They're going to run this and spike this to the next level on the daily, right? And then I explained to you downside potential. Now, in terms of calls, if I were interested in buying calls, what would be my personal best levels to be buying these call options at? If SPY had a major crash, where would the most likable reversal happen? You have to go with the oversold levels, man. FOMC can be crazy and this can have a big move. So these are your oversold levels. 429.70. This is key right here. This 429.70. There's a gap to fill at 429.70. This is key previous resistance. They're going to try to close this gap and reverse it at 429.70 if this does go super bearish. That's a level of interest for calls where I scalp quickly and the 430 calls go back in the money. What is another level of interest? 426, 426, there is strong support. It's not special because it's already been tested multiple times. This 429.90 level is a new gap that hasn't been filled yet. It's more special, and they're going to try to turn this previous resistance right here in this 429 mid zone into support if it were to crash, right? And then in terms of your lowest level, 424, that's an amazing level for calls that hasn't been tested. But going into this, from my understanding, if this were to flip super bearish and I were to play calls, I would be considering 429.70 and 426.50. That's what I'd be considering. 424 would be the best, but I doubt it gets that low, but anything's possible in this crazy market. So those are my overall levels, and I'll be using very tight stop losses. With that being said, there is another gap to fill at $433.80. That's like your make or break middle. I'm not too interested in trading at that specific level because it's towards the middle of these overall ranges that I'm giving out. Now, in terms of some other tips that I can give you, right, along with the levels that I already provided you, these are some recommendations that I can make, and these are some trade ideas that I have for you. So SPY is going to form a little support and resistance zone. That's what it's going to try to do, right? So it's going to try to form a little zone of support and resistance. So heading into FOMC, you need to identify where the support is, where the resistance is of the channel. And then what it's going to do is it's either going to break down or break out. So it's going to form a channel. Right now, you could say it's like from 437 to 438, right? So if it breaks above the channel, and then once it pulls back, if it bottoms above the previous high, that means it's forming higher support and it's going super bullish. Or if it bottoms at the previous high, that means it's still maintaining bullish momentum. And then they will try to push it to the 443 to 444. Me personally, I'm not too interested in playing that breakout for a bullish confirmation, as it could be a fake out. I would much rather just wait for puts for 443 to 444, or I would wait for a fake out confirmation. Now, in terms of bear theory, this is something I would be very interested in doing. Let's say the support is at 437, right? Basically, when FOMC triggers, let's say that a bull trap triggers. SPY has a massive crash. Wherever that crash triggers, you'll see it happen. At 2 p.m., 2:30 p.m., you'll see it happens. Whenever SPY has a massive crash and it cracks support, this is what I want you to do. I want you to wait for it to spike back up, and then in the meantime, you can look for those levels I told you about on calls for the reversals, 429.60 to 426. But what I want you to do is, if they crack support and a bull trap ever triggers throughout today, I want you to wait for it to spike back up to where the bull trap triggered, to where the support cracked. And then instead of buying your puts at the top of that previous resistance, I want you to buy the puts and short the SPY at the previous support, at the previous bottom of this channel. When it retests and it has that V shape, that's when I want you to short it. And then it's going to try to go back down and form the new lower high. Those are my ideas. Those are my game plans. I'm getting ready to go live with my team within Trader Society. If you want to join us, it is the first link down below in the description. We're going to absolutely crush it today.